Welcome, curious minds, to another deep dive. Today, we're pulling back the curtain on a company that's really become synonymous with the artificial intelligence revolution, Nvidia.
Yeah.
You've likely seen the headlines. I mean, a staggering $4 trillion market valuation. But what does that number really mean, and what's truly fueling this, well, meteoric rise?
Precisely. And we've gathered quite a bit here. In-depth analyses, market reports, financial summaries, all focused on understanding NVIDIA's, well, unprecedented journey. Our mission today really is to cut through the noise, distill the core drivers of its success, and explore the significant challenges and opportunities that lie ahead for this tech titan.
Yeah, we'll look at everything. From its hardware dominance, its software ecosystem. We'll peek into the financials and grapple with that big question. Is this valuation reflecting a sustainable economic shift, or are we maybe witnessing the makings of a market bubble? So settle in, because we're about to explore a fascinating corner of the global economy. Okay, so let's start by trying to contextualize this incredible valuation. Nvidia just made history, didn't it? Reaching a $4 trillion market cap on Wednesday, July 9, 2025. Shares climbed about 3% on NASDAQ to a 52-week high. Now, what's truly striking here isn't just the number itself, but the sheer speed of this growth.
Indeed, that's the key part. This isn't just about reaching a high figure. It's about the extraordinary velocity, the speed of value creation. NVIDIA's market cap has surged an astonishing, 2,000% since the beginning of 2020. Think about that. It quadrupled from roughly $1.05 trillion in July 2023 to its current valuation in just 2 years. That's fast. Since early 2023, its stock has soared over 1,000%. And in 2025 alone, it's gained 18%, significantly outpacing the NASDAQ Composite's 6.5% increase.
That speed is genuinely something else. I mean, we're talking about growth unmatched by even tech giants like Apple and Microsoft, which took several years to achieve comparable leaps, right? So what does this level of value creation mean when we compare Nvidia to other titans, or you mentioned even entire national economies?
Right. If we connect this to the bigger picture, NVIDIA's $4.004 trillion market cap now exceeds Microsoft's. That's at $3.7 trillion, and Apple's at $3.1 trillion. It's right at the very top. But what's fascinating, really, is how its value is just shy of India's estimated GDP of $4.2 trillion. Think about that. A modest 5% increase in NVIDIA's share price could actually push its market value beyond India's total GDP.
Wow, that comparison to national economies is just stunning.
Yeah.
But does a company becoming that large, does that introduce new types of risks or maybe responsibilities that traditional companies don't typically face?
That's an excellent point. It really signals that NVIDIA isn't just a leading tech stock anymore. It's considered the, quote, engine behind modern artificial intelligence. Its valuation now serves as a kind of living barometer for the perceived size and future potential of the global AI economy. This focus elevates it beyond just a business, transforming it into a significant geopolitical asset. It's intertwined with national economic strategies, semiconductor supply chains, export policies. We even saw its reach recently with the announcement of that NVIDIA-supported Perplexity AI browser, Comet, aimed at competing with Google Chrome.
Okay, so given this unprecedented scale, let's explore how Nvidia has managed to carve out such a dominant position. What are the foundational elements keeping it right there at the top of the AI food chain?
Well, NVIDIA's ascent is fundamentally anchored in its near monopolistic control over AI hardware, particularly its data center segment. That accounts for, a substantial 89% of its total revenue. In Q1 FY26, this segment pulled in $39.1 billion. That's a 73% year-over-year increase, largely driven by the hyperscalers, those massive cloud providers and enterprises deploying AI models.
And when we talk about their hardware dominance, what specific innovations or products are truly setting them apart? What makes them indispensable right now?
We're talking about flagship AI chips like the Blackwell NVL72 supercomputer. It delivers up to 30 times faster inference speeds compared to previous generations. That makes it indispensable for training large language models, LLMs, and also this emerging field of agentic AI systems. But beyond just individual chips, NVIDIA offers these comprehensive platforms tailored for different needs. You've got DGX for large-scale enterprise AI development, HGX for performance computing, IGX for AI processing right at the edge where the data is collected, and OVX for building these massive scalable data centers. Oh, and the NVIDIA RTX Puro Server Edition is also a leading data center GPU.
Okay, so really powerful hardware, clearly. But I've heard the software side, particularly something called CUDA, is arguably even more critical. What's the deal with CUDA? Why is it so significant?
CUDA. Yeah, it's widely seen as the gold standard for AI developers. It's this enduring competitive barrier, like a moat, that has locked in over 5 million users. It's actually a decades-old software ecosystem. It provides direct access to the GPU's parallel processing power. It includes compilers, crucial libraries like cuBLAs for linear algebra, cuDNN for deep learning. These are essentially highly optimized toolkits for the complex math that's fundamental to AI. And its compatibility with popular languages like C++, Python, Julia makes it incredibly easy for specialists to leverage those GPU resources.
So it sounds like their integrated approach, the hardware, the networking, the software, it creates a kind of ecosystem, doesn't it?
Hmm.
How exactly does that full stack strategy give them such a powerful advantage over competitors who might just focus on one piece? You've hit on a core point there, exactly. NVIDIA's integrated full stack approach is key. High-performance hardware like Blackwell and Hopper, then robust networking solutions that streamline data flow between thousands of chips, things like Spectrum-X, NVLink, plus specialized Bluefield DPUs that offload networking tasks, generating billions in revenue themselves, and then layer on top its comprehensive software ecosystems, UDA, NeMo, and GC developer platforms. Altogether, it creates this uniquely powerful competitive advantage. This fosters really high switching costs for customers. It makes it extremely difficult and expensive to move to rival solutions, even if competitors offer, say, comparable silicon on its own. And that helps justify NVIDIA's premium valuation, right? It ensures sustained revenue streams that extend way beyond just chip sales. That lock-in effect sounds incredibly powerful. But how sustainable is that advantage, especially with new players and, open source alternatives emerging?
Oh, it is a massive advantage, no question. The dominant CUDA ecosystem generates this powerful network effect. More developers use it because it's the standard, which in turn incentivizes more companies to optimize for NVIDIA hardware. This just solidifies CUD's position. This software lock-in is arguably a more significant long-term competitive advantage than the hardware alone. It contributes substantially to NVIDIA's sustained market share. I mean, look at the Q1 2025 data. NVIDIA held a staggering 92% of the data center GPU market. AMD had 8%. Intel basically zero.
Wow.
And yes, you mentioned it, those strategic partnerships with major cloud providers like Microsoft deploying tens of thousands of GB200 systems, that just further entrenches that position.
Right. So with such a strong foundation in hardware and software, the question naturally turns to the financials. What do the latest reports tell us about NVIDIA's performance and maybe specifically its profitability?
Okay, financials. NVIDIA's Q1 fiscal year 2026 that ended April 27, 2025, reported total revenue of $44.1 billion. That's a 69% increase year over year. The data center segment was, again, the undeniable main driver. It hit $39.1 billion, a 73% year-over-year jump. That's 89% of total revenue. Just to put that in perspective, in Q1 of the previous fiscal year, FY25, data center revenue was $22.6 billion, which itself was up an astounding 427% year over year.
So yeah, the shift from primarily a gaming GPU company to this AI infrastructure leader is truly profound. The numbers absolutely reflect that.
Absolutely. The gaming segment, I mean, it's still active, $2.6 billion in Q1 FY25, but it's just dwarfed by the data center growth now. The company projects Q2 FY26 revenue around $45 billion. And analysts, they forecast NVIDIA's revenue could reach $200 billion for the fiscal year ending January 2026. That's more than 3 times its 2024 revenue.
These numbers are just astounding. It suggests this almost unstoppable momentum, but I have heard some concerns about profitability lately despite the soaring revenue. What's causing that dip?
Yeah, this is a critical point. NVIDIA's GAAP gross margins, that's generally accepted accounting principles, they dipped to 60.5% in Q1 FY26. That's down significantly from 73.0% in the prior quarter and 78.4% a year earlier. Now, this decline is largely attributable to a substantial $4.5 billion charge they took in Q1 FY26. It's related to H20 GPU exports to China, which now require specific U.S. government licenses. But even if you take out that charge, margins were still down somewhat.
So these geopolitical risks, specifically the export controls, are directly impacting the bottom line. That's a clear, quantifiable effect we're seeing.
Precisely. It highlights a very clear, measurable effect of these external political and regulatory forces. The company actually anticipates an $8 billion loss in revenue for Q2 FY26 alone, just due to these U.S. export controls on those H20 GPUs going to China. These controls specifically target NVIDIA's most advanced AI chips.
Okay, so how is NVIDIA responding to these challenges, and what are the sort of longer-term implications for their strategy in China? China?
Well, Nvidia is developing modified chip versions specifically for the China market, like a variant of its Blackwell RTX Pro 6000 processor. It's designed specifically to comply with U.S. regulations, so these chips will be stripped of certain advanced technologies, like high bandwidth memory, HBM, which is crucial for handling massive AI data, and also NVLink, their high-speed chip interconnect. CEO Jensen Huang noted that NVIDIA's market share in China has fallen, quite dramatically, from 95% down to 50%, yet he still sees a substantial $50 billion potential AI market there, so they're not giving up on it.
That's a fascinating and complex dilemma, though, the idea that these controls meant to restrict could inadvertently end up helping Chinese competitors in the long run. How does Nvidia even begin to strategize around something like that?
It's a profound strategic challenge, absolutely. While these controls cause immediate revenue loss, Hong's comments suggest they might inadvertently encourage Chinese companies to accelerate their own AI development, to become less reliant. That could foster serious long-term competition. It could compel NVIDIA to significantly adapt its global strategy, maybe leading to a sort of bifurcated product line, one for regulated markets, another for less restricted ones. And this also ties into supply chain vulnerabilities, right? NVIDIA's heavy reliance on TSMC, the big Taiwanese foundry. Diversifying manufacturing to the US, Saudi Arabia, maybe back to Taiwan in different ways, that's ongoing, but scaling takes considerable time. Plus, there are these investigations into alleged Chinese attempts to circumvent sanctions via transshipment hubs. You see GPU imports to places like Malaysia surging, like 3,400% year over year in April 2025. So people are trying to find ways around it.
Okay, so given these geopolitical pressures and just the sheer scale of this market, is NVIDIA's near monopoly starting to show some cracks? Who are the emerging contenders really vying for a piece of this massive AI pie?
Yeah, its market leadership is definitely being increasingly challenged. AMD is a significant contender with its Instinct MI300X. That's a CPU-GPU hybrid chip designed for data centers, potentially rivaling NVIDIA's H100. Some analysts project AMD could capture maybe 15–20% of the data center GPU market by 2026. That would certainly put pressure on NVIDIA's pricing power. Intel is also making efforts with its Habana Gaudi 3 cloud AI chip, and they're developing their own in-house AI chips too.
So it's not just the big established players then. What about specialized firms or even the tech giants building their own solutions internally?
Correct. You have specialized startups like Tenstorrent and Cerebras targeting niche AI workloads with unique chip architectures. And crucially, the major tech giants, Apple, Google, Microsoft, Amazon, they're increasingly developing their own custom chips. ASICs, application-specific integrated circuits, these are custom-designed chips, highly efficient for a very narrow set of tasks, primarily for their own internal AI services. So they're trying to reduce reliance on NVIDIA, too.
And what about the software side, that CDAMO we talked about earlier? Is it truly impenetrable, or are there, as the sources suggest, maybe some cracks emerging?
Well, while it's still incredibly strong, yeah, the phrase cracks are emerging seems apt. Major cloud providers like Microsoft Azure AI and Amazon Bedrock are actively working to reduce their dependence on NVIDIA's proprietary CDA stack. They want greater flexibility, lower costs. And the proliferation of open source frameworks like PyTorch and TensorFlow also offers developers more choices, potentially lessening that lock-in effect over time. It's not gone, but it's maybe less absolute.
Okay, given everything we've discussed, the dominance, the challenges, the sheer scale we really have to confront the elephant in the room here, is this extraordinary valuation simply a market bubble waiting to burst, or are we actually witnessing a true fundamental reshaping of the global economy driven by AI?
Right, that's the multi-trillion-dollar question, isn't it? There are compelling arguments for both sides. Proponents of sustainable growth point to the sustained and, frankly, escalating investment in AI infrastructure. Major tech companies are projected to boost their capital expenditure to around $200 billion in 2025. Over $90 billion of that is specifically for generative AI infrastructure. A lot of this is driven by a pervasive fear of being left behind in the AI race. FOMO, basically. Plus, you have this concept of sovereign AI, where nations are investing billions to develop their own AI capabilities, directly driving demand for GPUs.
And the evolution of AI itself, the technology getting more capable, that must play a significant role in this optimistic view too.
Absolutely. AI agents, AI systems capable of making decisions and interacting autonomously, they're anticipated to surpass traditional AI chatbots maybe as soon as 2025. That drives demand for increasingly sophisticated, powerful infrastructure. And this broader idea of intelligence everywhere, where machine intelligence significantly augments global thought hours, that's viewed as a long-term economic driver. What's interesting here, though, is that despite the meteoric stock rise, Nvidia's stock trades at about 33 times its expected earnings. That's actually lower than its 5-year average price-to-earnings ratio of 41. So that suggests investors still have confidence in sustained future growth. It's not just hype, maybe?
Okay, so that's the bull case for Nvidia. Strong arguments. What about the AI bears, those who see signs of overvaluation or maybe significant potential risks?
Right, the other side. Arguments for overvaluation often highlight NVIDIA's price-to-sales ratio, the PS ratio. It stands at roughly 29 times its trailing 12 months revenue. That is a staggering 1,300% premium compared to its valuation back in 2020. This kind of valuation implicitly assumes a few things, like no meaningful competition emerging by 2030, a complete resolution of all these geopolitical risks we talked about, and continuous exponential AI adoption without hitting any kind of saturation point. Those are big assumptions. There are also concerns about simply overbuilding AI infrastructure, and the rapid obsolescence of GPUs is a big one. One crucial insight from the AI bears really captures this. No one will ever train a frontier model on the same data center twice. Why? Because the GPUs become outdated so incredibly quickly. That raises a fundamental question about the long-term sustainability of constantly needing hardware upgrades.
And beyond the hardware cycles, what about the broader societal impact of AI? How does something like the white-collar recession idea fit into this picture?
Yeah, this leads us to a critical societal concern, one some are calling the white-collar recession of 2025. The idea here is that as AI gets better at automating more sophisticated tasks, it's rapidly displacing professional jobs. Think legal, marketing, even some coding. Companies are starting to view human labor less as just a resource and more as a constraint compared to efficient, scalable AI systems. Now, while this drives AI investment because companies want that efficiency, it simultaneously raises huge questions about society's capacity to absorb that displaced labor and the potential for broader economic instability that could follow, which might, in turn, lead to regulatory interventions that could impact AI adoption rates. It's a complex feedback loop.
So it's this mix, a strategic necessity driving huge investment, but also potential overbuilding and significant societal disruption. Pulling it together, what are the key trends for AI investment in 2025 and beyond that emerge from our sources?
Well, we're seeing a clear shift, moving away from just generalized AI applications towards more industry-specific solutions. That increases demand for custom silicon, those ASICs we mentioned. There's also a growing focus on AI, reasoning the ability of AI to not just pattern match, but to think through problems logically. We're also seeing a rising need for tools to actually evaluate AI efficacy, and ROI is this investment paying off. Continued emphasis on cybersecurity leveraging AI is big, and likely a shift in investment opportunities towards software and service companies that integrate AI, rather than just focusing purely on the foundational hardware providers like Nvidia. But that pervasive impact of AI fundamentally altering workforce structures, that reinforces the argument for a fundamental societal shift being underway.
So, thinking about all this, what does it mean for you, the listener, trying to navigate this rapidly evolving world? NVIDIA's $4 trillion valuation, it definitely confirms its unparalleled position right at the forefront of the AI revolution, driven by that dominant hardware and the deeply ingrained CUDA software ecosystem. That full-stack approach has created a really formidable competitive barrier.
Exactly. And while AI mania has undeniably propelled NVIDIA to these heights, it's operating in an increasingly complex environment. Geopolitical headwinds, especially those U.S. export controls hitting China, they introduce substantial risks to revenue and profitability. That's clear. The competitive landscape is also intensifying. You've got rivals like AMD and Intel stepping up, plus tech giants developing custom silicon, open source alternatives emerging, all vying for a share. These pressures suggest an inevitable, maybe gradual, but probably inevitable erosion of NVIDIA's near monopoly position over time.
Ultimately, though, the prevailing view from our sources seems to lean towards this valuation reflecting a fundamental shift in the global economy, fueled by AI's pervasive impact and that sustained investment from corporations and nations, the emergence of AI agents, the concept of increasing intelligence capacity globally. It does point to a structural, long-term demand for foundational compute power.
However, you can't ignore the elements of a potential bubble that persist. Those high valuation metrics, concerns about market saturation, or that rapid hardware obsolescence we discussed. And the societal implications of AI-driven job displacement present this really complex backdrop that could influence the pace and nature of AI adoption down the road. NVIDIA's ability to sustain its incredible growth will really hinge on its agility, how well it navigates these geopolitical and competitive challenges while continuing to innovate and expand its ecosystem.
It's an incredibly complex and fascinating story. What really stands out to you from this deep dive? For me, maybe it's just the sheer scale, that market cap rivaling national economies, or that paradox, how U.S. export controls could inadvertently speed up Chinese AI development. What an impactful moment in tech and economic history we're living through.
Absolutely. And maybe something for you, the listener, to consider. If AI is indeed becoming the new workforce, fundamentally altering our economic and social structures, what new kinds of foundational infrastructure providers will emerge to support this transformation beyond just chips? And maybe how might governments need to adapt their thinking and policies to manage this really profound societal reordering? That's definitely something to mull over.